So I was shopping for mortgages and I realized that most banks tend to offer 30-year mortgages. But I remember seeing an episode from you a couple of weeks ago where you talked about the availability of 15-year mortgages. I mean, wouldn't it be easier if banks offer 15-year mortgages so that way they can get their money back faster? You would think, right? Well, if you want to learn more, keep on watching. Hello everyone, and welcome back to another episode at Novarise Invest. For those who are tuning in for the first time, this is your channel for real estate education. So today we're going to talk about mortgages, right? Why do banks prefer to give you a 30-year mortgage instead of a 15-year one? But before we dive into all the details, I want you to understand one thing, okay? And one thing only. Banks are in the business of making money. That is, they're not here to take your house away. They're not here to leave you homeless or to leave you on the street. No, none of that stuff. They are in the business of making money. For that reason, they plan things accordingly so that they can create a win-win situation. A win-win situation for you. Why? Because they want to make sure you can pay for the mortgage, and at the same time, a win-win situation for them so that way they can continue to make money off of you, right? So what we're going to do now is we're going to dive into the details as to why do banks truly, really rather give you a 30-year mortgage as opposed to a 15-year one. So let's just go straight to the board. And what we're going to do the reason, and over here, we're going to do what is it that the bank gets out of it, and what is it that you get out of whatever is it that they're doing, right? So first things first, why do banks give you a 30-year mortgage? Well, for one reason is that you get lower monthly payments, right? So that way, the bank will keep getting their money, check, and that way you can afford to pay the bank. Why? Because it's not the same to have a $2,000 mortgage as opposed to having a $1,000 mortgage. So typically when you get a 15-year mortgage, because you're condensing the time to half of what a 30-year mortgage will be, that means that your monthly payments will be higher. And sometimes that can be unsustainable for some families. And for that reason, 30-year mortgage tends to be the preferred option because the banks know that there's a higher likelihood of you to afford the monthly payments as opposed to a shorter mortgage. So that's the first point, right? Now, the second point has to do with something that's called the amortization, right? And what does amortization allows you to do? Well, let me just do a quick graphic, right? So let's say you have a 30-year mortgage, and so you have 0, and then you have 30, and then this is halfway, right? So during the first half, that's when you pay the highest amount of interest as possible. And then after you get through, half of the mortgage, then the mortgage interest, they start, minimizing and getting smaller and smaller. So the reason why the banks prefer to give you a 30-year mortgage is because they will make the most interest up front. Why is that? Because historically and statistically, people tend to perform well in the mortgages in the first 5 to 7 years, right? Because you're excited, you have a new home, you want this home, and you're increasing your chances of paying the bank, right? The bank knows that. The bank knows that you don't want to let go of your home. So they work it out in a way so that they can get the most money out of you in the event something happens in the future. And if they are getting a 15-year mortgage, that means they're making less interest off of you up front. So once again, they're in the business of making money. So check, right? And at the same time, you are sort of taken care of because, hey, you are still building equity. Yes, you're putting more money towards interest, but you continue to build equity in your home. So that's the second reason why they want to do that. Now, the third reason why banks prefer a 30-year mortgage is because overall, they get to make more money off of you on interest. So more interest overall. Because it is not the same to charge somebody 30-year worth of interest as opposed to 15-year worth of interest. So the bank knows it. Now you know it, right? And that's why they prefer the longer mortgage, because they get to make money off of you in the long run. Not just money in the long run, more money off of you in the long run. So once again, the bank is making money. And then you, well, you're probably not too happy at this point, but hey, you still have the house, right? And you're still living in it. So it's great, right? So now moving on to the fourth point as to why the bank will prefer a longer term mortgage. But before we do that, if you're enjoying this episode, do not forget to hit the like button right here so you can help this episode rank and help other people like you who are looking for this kind of information. And if you happen to know somebody who is in fact looking for this type of information, then feel free to share the love and send this episode their way so that they can stay educated just like you are right now. So back to the board, right? The next point that I'm about to tell you sort of like has something to do with this one, right? And it has to do with the fact that, hey, what happens if you default, right? So if you default, or it doesn't have to be so dramatic. Let's say you don't default, but let's say you either default or get bored of them, get bored of the bank, right? If any of these situations happens, that means that you're reducing the time that you're going to be with that bank, right? And that, once again, corroborates my point about the bank knowing that there's a higher likelihood that you will no longer be with them after the 5th or the 7th year, right? Because you can, one, either default, just like I mentioned right here, or you can just simply get bored and go to another bank. And how do you go to another bank? By refinancing, right? Let's say you got an offer in the mail 7 years later, and this bank is offering you a mortgage of refinancing for 1% less. Now, 1% might sound very little, but then when you add it up to the remaining 23 years in your mortgage, it does add up to a lot of money. So the bank actually knows that. So if you do get bored, then with a more reason, they want to push for a 30-year mortgage because they want to get the most money out of you from the very beginning, from the very start of the mortgage. So once again, the bank is checked, they're making money. And then in this case scenario, if you default, not so good on you, but if you do get bored and you decide to refinance, hey, it worked out for you because now you got a lower rate and you're saving more money in interest. And now on to the last point, which is kind of like a variation of this point and this one right here. The bank can also get bored of you, right? So they can get bored. And because they get bored, they can sell your mortgage. They can actually find another investor out there in the market and they sell your mortgage. They sell whatever amount of money you owe to them. So let's say, for example, you have a mortgage and you still owe $180,000, right? So $180,000, this bank comes in and says, you know what? I'm going to find an investor and I'm going to sell this to them at $170,000, so to speak, right? So at a $10,000 discount. Now you might be thinking, that doesn't sound too smart. Like, why would the bank do that? I thought the banks are in the business of making money. Yes, they are. Hear me out. So what they do is that they package this mortgage, or your mortgage in this case, in a way that it looks very enticing to the new investor. So new investor will come in, buy this at a $10,000 discount and take the work off of this bank and then chase you to collect the payments, right? And now the bank automatically got $170,000 in their accounts. They got liquid cash so that they can go out and lend the money to new people who are looking to get homes, new people who are looking to use that capital. And the bank will charge them a certain percentage in origination fees. They're going to charge them, plenty of interest up front for the next 5 to 7 years. So whatever amount of money that they quote unquote lost here at the discounted price, they will be making it back here, applying the amortization and also by charging people loan origination fees. So once again, the bank checked, made money, and then you never defaulted. You continue to make payments as if nothing happened, and you are still living in the house nicely and comfortably. So that's pretty much all I have for you today. Hopefully you found the episode very informative. And while I still have you here, do not forget to check this episode right here. That's going to help you complement everything you just learned today. And until then, I'll see you guys soon. Take care. Bye-bye.